Hey there. Ready for another deep dive?
Mm-hmm.
Today we're going deep on U.S. finance to explore Ally Financial.
LI Financial.
Yeah, they're a major player in the U.S. market. And their latest earnings call,
Mm-hmm.
you know, reveals some pretty interesting insights about the American financial landscape.
Okay.
Now, you might be thinking, what does a U.S. finance company have to do with me all the way over here in India? Well, that's what we're here to unpack. By looking at Ally's strategies, we can maybe draw some parallels and even learn a thing or two about business and finance no matter where you are in the world.
It's like peeking into a different financial ecosystem.
Exactly.
Yeah, we'll see how global events and trends impact financial strategies.
Yeah.
And Ali's moves offer a compelling case study.
If you put it like this, Ally just had their Q4 2024 earnings call. It's similar to how Indian companies like Reliance or Tata Motors give updates on their performance.
Mm.
But here's the twist. Ally is shaking things up. They're selling their credit card business and hitting pause on new mortgage loans. That's a big shift. Like a company in India deciding to just ditch a whole product line to focus on something completely different.
What's fascinating here is the why behind this shift.
Duh.
Ally is laser focused on profitability and scaling up their most successful ventures. They're doubling down on what they excel at: auto financing and corporate lending. This is a global trend we're seeing in various sectors.
Okay, so let's zoom in on this auto financing dominance. Ally originated a massive $39 billion in auto loans
Wow.
from a record 14.6 million applications. To put that in perspective, it's like financing a significant portion of all the new cars sold in India in just 3 months.
Wow, that's a lot of cars.
Yeah,
This dominance comes from a couple of things. Firstly, their dealer network is huge and deeply embedded in the U.S. market.
Yeah.
Think of it like having tie-ups with car dealerships across every major city in India.
right.
This gives them access to a huge customer base right at the point of sale. Secondly, they're really smart about who they lend to.
Yeah.
They use selective underwriting, which means they carefully choose who gets a loan based on a thorough risk assessment. This helps them ensure good returns even when the market is unpredictable. A lesson for any growing Indian business.
So it's like a powerful combination of reach and risk management. Now, on top of their auto loan success, Ally's deposit franchise is booming. They've attracted over 230,000 new customers and now manage a whopping $143 billion in deposits. That's like an Indian bank suddenly seeing a massive influx of new savers. What is their secret sauce?
Their success stems from a laser focus on digital features and making sure their customers are happy. They've been early adopters of online and mobile banking platforms.
Yeah.
This resonates with what we're seeing in India, where digital banking is exploding.
Right.
It highlights how crucial it is for financial institutions to embrace the digital revolution to attract and retain customers.
It's like they've cracked the code of making banking easy and accessible in a digital world. But it's not all sunshine and rainbows. They're still cautious about loan defaults, especially with the U.S. economy facing some uncertainty. Late payments, or delinquencies as they're called, are a concern in any market.
Absolutely. Ally's keeping a close watch on how many of those late payments actually result in losses.
Right.
This caution reflects broader economic anxieties in the U.S. with inflation and changing interest rates.
Yeah.
It's a good reminder that even mature markets like the U.S. have their challenges.
It's like checking the economic pulse.
Yeah.
Looking for next warning signs.
Yeah.
But despite these challenges, Ally is still projecting solid profits and growth in 2025. They seem confident that their strategic focus will keep them on a positive trajectory.
This resilience is interesting, particularly for Indian businesses aiming to expand globally. It demonstrates how companies can adapt and thrive even when the financial winds are shifting.
Okay, let's dig a little deeper into Ally's financials. Their net financing revenue. Basically, the money they make from lending hit $1.5 billion in the fourth quarter. To give you a familiar comparison, it's like when an Indian company reports its revenue from loans.
Okay.
What's interesting is how this revenue is generated. Ally benefits from rising interest rates on their auto loans. However, at the same time, the cost of attracting deposits is also going up. It's a constant balancing act, similar to what Indian banks face with the Reserve Bank of India adjusting interest rates.
Yeah, it's a tough balancing act for sure.
It's like trying to keep a boat steady amidst choppy waters.
Yeah.
And speaking of navigating choppy waters, Ally is very focused on managing risk, especially with their auto loans. They reported a net charge-off rate of 1.59%. This is the percentage of loans they don't expect to be paid back.
Okay.
This rate was actually lower than they initially predicted, partly due to their commercial loans performing exceptionally well. 0 losses in that area.
Wow, that's
Right.
impressive.
It's like hitting the jackpot in terms of managing risk. However, they are closely watching their consumer auto loans, where the charge-off rate was a bit higher at 2.34%. This is where their strategies for handling those late payments really come into play.
Makes sense.
Exactly. Ally is proactively trying to keep those charge-offs low, and they're seeing some positive signs. Their newer auto loans, the ones originated in 2024, are performing better than anticipated.
Good news.
It's like seeing those investments start to bear fruit. And they're also getting a boost from the used car market. Used car prices have remained relatively strong, which helps them recover more money if someone defaults and they have to repossess and sell the car.
Oh, I see.
Think of it like reselling a used car in India.
Okay.
If the resale value holds up, it cushions the blow if a borrower doesn't repay their loan.
Right.
Exactly. But Ally isn't resting on their laurels. They're still monitoring those late payments because those could be early warning signs of trouble down the road.
And that's where their strategy of actively working with borrowers who are behind on payments is so important. They're finding that offering solutions like payment extensions or modifications can make a big difference.
It's like extending a helping hand rather than waiting for someone to stumble.
And their efforts seem to be working. They're seeing fewer loans ending up in default, which is a positive outcome.
Now let's shift gears and explore another interesting aspect of Ally's business, their insurance operations. They had a stellar year in 2024, with profits jumping by $25 million compared to the previous year. Their total insurance premiums, the money they collect from policyholders, reached $390 million. That's a significant chunk of change, and it shows how this part of their business is gaining traction.
This growth is largely fueled by their expanding partnerships with car manufacturers. These partnerships allow Ally to offer insurance directly to customers buying new cars.
Yeah.
It's a smart strategy because it leverages their existing relationships and expands their customer base.
So it's a win-win situation, offering convenience for car buyers and growth opportunities for Ally. But just like with their auto loans, they're carefully managing risk in their insurance business.
Right.
They need to make sure the premiums they collect are enough to cover potential claims.
Exactly. It's about finding that sweet spot between offering competitive insurance rates and ensuring they have enough financial reserves to pay out claims when needed.
It's a delicate balancing act. Now, before we dive into more specifics about Ally's operations, let's pause for a moment and consider this. We've seen how Ally is making bold moves in a dynamic market. They're focusing on their strengths, navigating economic uncertainty, and embracing digital solutions. What parallels do you see between Ally's approach and what some Indian companies are doing? Think about the auto industry, the financial sector, or even the insurance market. Are there any similarities in their strategies, any striking differences?
That's a thought-provoking question. It's fascinating to see how global trends manifest in different markets and how companies adapt their strategies to local contexts. It highlights the importance of understanding the nuances of each market while also keeping an eye on the broader global landscape.
Absolutely. Now, are you ready to delve into some more specific examples of Ally's strategies and how they're tackling these challenges head-on?
I'm eager to explore further. Let's continue our deep dive.
All right, let's do it.
Let's dive into Ally's strategic shift away from mortgages and credit cards.
Okay, so they're selling their credit card business and basically shutting down their mortgage operations. Big moves. Why this strategic retreat?
It boils down to focus and profitability. Ally's CEO emphasized this, power of focus during the earnings call. They're doubling down on their most profitable and scalable businesses, which are auto finance, corporate lending, and their deposit platform.
So it's like streamlining their portfolio, concentrating their resources on what's working best.
Exactly. Mortgages and credit cards weren't delivering the same returns as Ally's core operations. Plus, they require significant capital and face fierce competition. By exiting these areas, Ally can free up resources and capitalize on areas where they have a clear competitive edge.
It's a reminder that sometimes strategic retreat can be just as important as expansion. It's about recognizing your strengths and allocating resources where they'll have the greatest impact.
Absolutely. And this is particularly relevant in today's, rapidly changing business landscape. Companies need to be agile and adaptable, willing to pivot their strategies to stay ahead of the curve. Clinging to a losing strategy can be a costly mistake.
Now let's shift gears and delve into Ally's dominance in auto financing. Originating $39 billion in auto loans in a single quarter is a staggering figure. What's the secret sauce behind this success?
They have a couple of key advantages. Firstly, their extensive dealer network gives them access to a massive pool of potential borrowers. Think of it like having a presence in every major car dealership across India. This network is crucial for Ally's business model.
So they're meeting customers right where they are at the point of sale.
Precisely. They work closely with these dealers, offering financing options to customers right at the dealership. It's a seamless and convenient experience for car buyers, giving Ally a significant edge over competitors who rely more on online or direct lending channels.
It's like having a financial partner integrated into the car buying process.
And Ally isn't just chasing volume, they're laser focused on risk management. They use sophisticated data analytics and credit scoring models to assess borrowers and ensure they're lending to individuals with a high likelihood of repayment.
It's a data-driven approach to lending, carefully evaluating each applicant to minimize risk.
Precisely. This selective underwriting approach helps Ally maintain strong credit quality and minimize losses even in a challenging economic environment. It's a valuable lesson for any lender, whether in the U.S. or India. Prudent risk management is essential for long-term success in the lending business.
It's about achieving sustainable growth, ensuring that expansion is built on a solid foundation of responsible lending practices.
Exactly. Now, another interesting aspect of Ally's auto financing business is their commitment to serving customers across the credit spectrum. They're not just targeting prime borrowers with excellent credit scores. They also have programs tailored to borrowers with lower credit scores who might face difficulty securing financing elsewhere.
So they're casting a wider net, providing opportunities for individuals who might otherwise be excluded from traditional lending channels.
Precisely. This strategy allows Ally to tap into a larger market and diversify their loan portfolio, which can help mitigate risk. It's a smart approach, especially during times of economic uncertainty when lending to a broader range of borrowers can help stabilize their portfolio.
It's like diversifying your investments, spreading your risk across different asset classes to weather market fluctuations.
Now let's turn our attention to Ally's deposit franchise. They added a remarkable number of new customers in 2024, and their total deposits reached an impressive $143 billion. What's driving this growth?
Well, they've been pioneers in embracing the digital revolution in banking. Their online and mobile banking platforms are top-notch, offering customers a seamless and convenient experience. They've also been aggressive in offering competitive interest rates on their deposit products, attracting customers seeking higher returns on their savings.
It's a combination of convenience and attractive returns that's resonating with customers. They've made banking accessible and rewarding.
Exactly. And this focus on digital innovation and customer satisfaction has paid off handsomely for Ally. They've built a loyal customer base that continues to grow, even as competition in the online banking space intensifies.
It's a testament to the power of building a strong brand and delivering on your promises. Customers are increasingly discerning and demanding, and they'll quickly switch to a competitor if they don't feel valued and appreciated.
It's like any business, really. Reputation and customer loyalty are invaluable, especially in a digital world where information travels fast.
Now let's discuss Ally's credit performance and their outlook for the future. They're cautiously optimistic, acknowledging the economic uncertainties while highlighting positive trends.
Right. They're seeing improvement in delinquencies, but they're keeping a close eye on those numbers, especially in their consumer auto loan portfolio.
And their proactive approach to managing delinquencies through early intervention and borrower assistance programs appears to be effective. They're seeing fewer loans ending up in default, which is a positive sign.
It's like addressing potential problems before they escalate, intervening early to prevent larger issues down the road.
Precisely. And this proactive approach to risk management will be crucial for Ally as they navigate potential economic headwinds.
They're also benefiting from the strong performance of their commercial loan portfolio, which had 0 losses in 2024. That's remarkable, especially considering the economic challenges many businesses faced.
It highlights their expertise in lending to businesses and their focus on providing loans secured by assets. This approach helps mitigate risk and ensure a steady stream of income even when economic conditions are volatile.
It's like having a safety net built into their lending practices, providing stability even during turbulent times.
Exactly. And this strength in their commercial lending business provides a valuable buffer for Ally, allowing them to weather potential challenges in their consumer lending operations.
Now let's talk about Ally's profitability expectations for 2025. They're projecting a net interest margin between 3.4% and 3.5%, which is a key indicator of their ability to generate profits from their lending activities.
This range reflects the delicate balancing act they're facing, with rising interest rates on their loans being offset by increasing costs for deposits. It's a constant adjustment, ensuring they maintain a healthy margin.
Right. And they're also dealing with the impact of selling their credit card business, which had higher interest rates, but also higher operating costs and credit risks.
It's like recalibrating their business model, adjusting to the changes in their portfolio.
Exactly. And Ally believes that their strategic focus on their core businesses, combined with disciplined expense management, will enable them to achieve their profitability targets even as they navigate these transitions.
It's about maintaining efficiency and controlling costs, ensuring they remain profitable even as they adapt to new market dynamics.
Now, before we move on to explore some additional insights from Ally's earnings call, let's pause and consider this.
Yeah.
If you were advising an Indian bank or financial institution, what key takeaways would you highlight from Ally's strategic approach? Think about their focus on digital innovation, their risk management practices, their emphasis on customer experience, and their willingness to adapt to changing market conditions. What lessons could be applied to the Indian financial landscape?
That's an insightful question. It's fascinating to consider how global trends and strategies can be adapted and implemented in different markets. It highlights the importance of learning from each other's experiences, sharing best practices, and collaborating to drive innovation and growth in the financial services industry, regardless of geographical boundaries.
Absolutely. Now, are you ready to delve into some more specific examples of Ally's initiatives and how they're translating these strategies into tangible results?
I'm eager to explore further. Let's continue our deep dive. Let's dive into some specifics about how Ally is turning their strategic vision into reality.
All right, let's get into the nitty-gritty. Where are they investing and innovating?
One standout area is their relentless focus on enhancing their digital capabilities. They're continuously refining their online and mobile banking platforms, adding features and streamlining the user experience. It's like they're creating a virtual bank branch that's always open, accessible from anywhere.
So they're meeting the demands of today's tech-savvy customer who wants everything at their fingertips.
Precisely. And they're not stopping at just transactions. They're leveraging technology to enhance customer service and offer personalized guidance. For example, they've integrated AI-powered chatbots into their platforms.
So it's like having a virtual assistant for your finances, available 24/7 to answer questions and offer support.
Exactly. These chatbots can handle a wide range of tasks, from answering basic questions to providing tailored financial advice. It's a great example of how technology can personalize the banking experience.
And it's something we're seeing more and more in India as well. Financial institutions are realizing the power of AI and chatbots to enhance customer service and make banking more efficient.
Now, Ally isn't just focused on improving their existing offerings, they're also exploring new and innovative ways to serve their customers. For example, they launched Ally Invest, a platform that gives customers access to a variety of investment options.
It's like they're expanding their role from a traditional bank to a comprehensive financial partner, helping customers manage their investments and grow their wealth.
Exactly. Ally Invest offers everything from stocks and bonds to ETFs and even robo-advisory services. It's a one-stop shop for anyone looking to build their investment portfolio.
And it's all done with a commitment to transparency and customer education. They provide a wealth of resources on their website to help customers understand complex financial products and make informed decisions.
That's a key differentiator for Ally. They're not just pushing products, they're empowering their customers with knowledge and tools to make smart financial choices. It's like offering a financial literacy course alongside their banking services.
Now let's switch gears and talk about Ally's risk management, particularly in their core auto financing business. What are they doing to navigate the challenges of a volatile economy and changing consumer behavior?
One key strategy is their sophisticated use of data analytics and credit scoring models. They've invested heavily in building a robust data infrastructure that analyzes vast amounts of borrower information.
So they're using data to gain a deeper understanding of their customers' financial profiles and predict their likelihood of repaying loans.
Precisely. They're not just looking at traditional credit scores, they're incorporating alternative data sources such as utility payments and rent history to get a more holistic picture of a borrower's creditworthiness.
It's like using a high-powered lens to examine every aspect of a borrower's financial history.
Exactly. This comprehensive approach helps them identify potential risks early on and make more informed lending decisions.
It's a proactive approach to risk management, using data to anticipate and mitigate potential challenges.
And they're constantly refining their models and adapting their underwriting practices to keep pace with changing economic conditions and consumer behavior. It's a dynamic process that requires vigilance and adaptability.
It's like staying ahead of the curve, constantly adjusting your strategies to navigate the ever-changing financial landscape.
Now let's briefly touch on their insurance operations, which have seen significant growth in recent years, fueled by partnerships with car manufacturers. Their strategy here leverages their existing relationships with dealerships and expertise in auto financing.
So they're offering insurance products directly to car buyers, creating a seamless and convenient experience.
Exactly. It's a natural extension of their core business, providing a one-stop shop for car buyers' financing and insurance needs.
And they're not just offering standard auto insurance policies. They're developing innovative products like Gap Insurance, which protects car buyers from financial loss if their car is totaled or stolen.
It's about understanding the evolving needs of car buyers and providing solutions that offer peace of mind.
It sounds like Ally is taking a holistic approach to serving their customers, offering a comprehensive suite of financial products and services tailored to their needs.
Exactly. And that brings us to the key takeaways from Ally's story. Their journey highlights the importance of strategic focus, adaptability, and a relentless commitment to customer satisfaction. These are principles that can guide businesses to success in any industry or market.
Like a universal blueprint for success applicable across borders and industries.
And their story also underscores the transformative power of technology. Embracing digital innovation has been crucial for Ally's growth, enabling them to enhance the customer experience, streamline operations, and expand into new markets.
It's a prime example of how technology can be a catalyst for innovation and growth.
And lastly, Ally's experience demonstrates the importance of prudent risk management. Their data-driven approach and proactive strategies have helped them maintain strong credit quality and navigate economic turbulence.
It's a reminder that managing risk is not just about avoiding losses. It's about creating a stable foundation for sustainable growth.
Ally's journey offers valuable lessons for businesses worldwide, demonstrating the power of adapting to the digital age, managing risk effectively, and constantly innovating to meet evolving customer needs.
So what can someone in India or anywhere else in the world glean from Ally's experience? Their story underscores the importance of strategic focus, customer centricity, and navigating economic uncertainty challenges that resonate globally. Ally's success, even amidst market shifts, shows how vital it is for businesses to adapt to a digital world, manage risk skillfully, and always be innovating to meet the ever-changing needs of their customers. So until next time, keep exploring and stay curious.